in the Middle East is escalating, with more attacks on critical energy infrastructure.
It was a sea of red in share markets overnight.
Iranian missiles have struck Qatar's main LNG facility following Israeli strikes on Iran's massive gas field.
The shock and awe, a reality check for the markets.
The key message for markets from the events in the Middle East is that the war is far from over.
It is too soon to know the scope and duration of the potential effects on the economy.
The latest attacks helped push the oil price past $110 a barrel, while the ASX 200 has now lost roughly 7% since the war began, or around $250 billion from its February record high.
You start to see a war in Iran coming through, oil prices popping, more inflationary pressure, interest rates move up.
There's concern about the negative impact on economic growth. I think the most likely scenario right here, right now, is that we are in the midst of a correction.
Colin Parkes had his own white-knuckle ride, seeing thousands of dollars wiped off his super since the war began.
Unnerving, I think, is the first thing. Probably a stiff scotch, followed by a dose of reality.
Anyone with superannuation is exposed to movements in financial markets. Australians have around $4.5 trillion in super, with the average balance at around $250,000 for those approaching retirement.
It's really easy for you to jump into your app and to see exactly how your fund is invested. Normally, it will be a mixture of assets, so the share market, international equities, bonds, some cash, fixed interest, as well as infrastructure as well.
Colin has his portfolio balanced.
I am shielded somewhat by having investments also in property and cash, so not fully exposed to equities.
Super Ratings Director Kirby Rappell says now is when people start to worry whether they should move their money to cash.
You can call your super fund and have a chat and sort of understand or get some insights from them or even some advice. Typically, moving to cash is easy, figuring out when to move back is hard, and even if you are 60, you've probably got 25 years left that you need to live off your super for.
So I would say, be careful not to sell out at the bottom and crystallise your loss. Hold your nerve. Markets will, as we've seen in the past, revert to the mean.
The process of moving your super savings away from shares and more towards cash can take as little as a couple of days. But experts warn people should seek their own personal financial advice before making any major investment decisions.
It can be really hard for people to understand if I do nothing, I actually might be doing more. And if I'd switched it, say, at the bottom of the GFC into cash and stayed there, my super would have been worth at least double staying in a balanced fund over staying in cash.
Having lived through those times, Colin Parkes is holding his nerve.
We've still got a little bit of time on our side. If I was 10 years older, I would be more concerned.
A super amount of patience needed during volatile times.